Well, I would like to introduce our keynote speaker. We are very excited to have Neel Kashkari. He's the president of the Federal Reserve Bank of Minneapolis, one of the Fed's 12 regional banks. The Minneapolis Fed serves the public by pursuing a growing economy that works for all of us, and the bank's district includes Minnesota, the Dakotas, Montana, northwestern Wisconsin, and the Upper Peninsula of Michigan. Neel serves as a member of the Federal Open Market Committee, which sets the nation's monetary policy. You've kind of been busy lately. Neel began his career as an aerospace engineer developing technology for NASA space missions. He later held a variety of roles in public service and finance, most notably as Assistant Secretary of the Treasury during the 2008 financial crisis, where he oversaw the Troubled Asset Relief Program, otherwise known as TARP. Neel lives with his wife, 2 young children, and their Newfoundland dog in Orono, Minnesota. Please help me welcome Neel to the stage. Welcome.
Thank you. Well, good morning, everyone. Thank you, Jackie, for having me. Thank you all for being here. I thought I'd just start by just giving you a little overview of why we're here, what the Minneapolis Fed does and why we're here. And then, as Jackie and Eric said, I'm going to ask you some questions because I want to learn about what's happening in the economy here. Excuse me. I've been at the Federal Reserve for about 10 years. This is my 10th year here. And as Jackie said, our jobs are to represent all of you. So we have six states in what's called the 9th Federal Reserve District. There are 12 Federal Reserve districts in the country. And our jobs are to represent you. So I go back to Washington, D.C. every 6 weeks, where we have Federal Open Market Committee meetings where we set interest rates for the nation. Part of what I'm doing in those meetings is I'm talking about what's happening here in our regional economy. Now, we cannot set a different monetary policy, a different interest rate for Minnesota and for California and for New York. We have to set, because we all use the dollar, we have to set the same interest rate policy for the country. But my job is to make sure that this region is part of that deliberative process so we get the best policy we possibly can for the country as a whole. So meetings like this and visits like this are great because it gives me a chance to directly hear from people, how's the economy going? What's happening on inflation? That's obviously a big topic. What's happening in the job market? Is the economy strengthening? Is it slowing down? What's on your mind? And all of this with me and my colleagues helps us get smarter about what's going on in the national economy too. Now we look at a ton of data. We look at data on how fast is the economy growing, how much investment are businesses doing, are they hiring workers, are they laying off workers, is inflation going up, is inflation going down? But a lot of times that data that we're looking at send us conflicting signals. So how do we make sense of it? Well, conversations like this help us to make sense of it because you all, I hope, are going to give me feedback about what's happening here in the regional economy here. And that helps me make sense of, okay, is the economy growing or is it slowing down? And so the more candid you are with me, the more I will learn from you. And even if your candid feedback is, hey, you idiots don't know what you're doing, I've heard that before, by the way, feel free, offer it. I promise you we will take something away from whatever feedback you have to offer. So with that, Jackie, thank you. I'm going to turn to some of these questions just to collect a few data points from you on who you are and what you're seeing, and then this will help shape our conversation. So first question is, which of the following describes you? Are you an employer, a worker, a student, looking for work, not working, retired? Oh, I guess we got it there.
Can you see it?
Yep.
Okay.
Okay, so this looks pretty good. We have about a lot of employers, a lot of workers. I'm happy nobody's looking for work. So it sounds like everybody, at least in this room, who wants to work is working. All right, let's go to the next question. How optimistic or pessimistic are you about the economy for this year? It's like an arm wrestling match here. Okay, so it looks like it's kind of all over the map, maybe a little bit more pessimistic than optimistic. I wonder if we put a political lens on that, we might see two different categories of folks there. But pretty evenly split, optimism and pessimism, okay? Next question. What influences your outlook assessment? Like, what are the key things that are driving your optimism or your pessimism? A word or two that you could enter in. It could be, anyway, I don't want to lead you. You guys just offer up your own. Tariffs, politics, Trump, interest rates, inflation, I'm seeing. Uncertainty. Interesting. Okay. I'll say this. We've done this a lot over the last several years, and it's rarely been this scattered. Usually it's a fewer number of words dominating. It could be housing or inflation or jobs. There are a lot of words up on that screen. A few of them, of course, are standing out. Okay, just a few more questions. Let's go to the next one. How has the number of job openings changed in the last 12 months? They're growing, they're getting smaller. Okay, looks like mostly unchanged. Maybe tilted slightly softer, but mostly unchanged. And then I think the last one is, how do you expect prices to change this year compared to last year? Increase by a lot or all the way down to decrease by a lot? Okay, so some to increase by a lot seems to be dominating. So inflation, sounds like we still have work to do on inflation. This is great. Thank you for participating. Really great context for our discussion. I look forward to our discussion.
Yeah, thank you. So I just want to say welcome, Neel, and Neel's team. They've been fantastic to work with. And just a reminder that Neel really does want to hear from you. So we're going to have two people going around with mics to hear your question. Please wait for the mic before you give us your question. Tell us who you are and who you're representing. So I get to open it up with some questions. And my first question is, I should get our mic people. You want to come up and grab the mics really quick while I'm asking this first question, and then they'll be ready to find you if you want to stand up for your question. They're right here, Alyssa and Darren. Right there. Thank you. Thanks. Super. Thank you. Okay. So my first question, and I've had a number of people ask me this question, and I didn't have an answer. So it is, why did you choose Detroit Lakes to make one of your regional site visits? I'd like to think that I called Neel, my good friend, and I said, hey, Neel, come to DL for our economic summit. And he would say, yeah, of course, anything for you, Jackie. Didn't happen like that. He decided to come to Detroit Lakes as one of his regional site visits. And so excited that you're here, but why Detroit Lakes? That's the big question.
Yeah, and the answer is, which is true but may not be all that exciting, is I haven't been here before. I try to go around and visit cities that I haven't been to before. They're all a little bit different. The challenges they face are all a little bit different. I learn a lot more going to newer places that I haven't been to than going, if I always went to Duluth, I wouldn't learn as much than if I make my way around the state of Minnesota. And so I apologize, it's taken me a while to get here, but I'm very happy to be here now and have had a wonderful visit yesterday and today.
Yeah, thank you. Last night, we convened a roundtable of business leaders, business people, at the request of Neel and his team to really understand the climate here in Detroit Lakes. And so we had about 15 of our businesses meet with Neel, and I'm just curious, what did you take away? It was a very candid conversation. Again, for those of you that were there, thank you. But what did you take away? And the second question would be, is this what you're hearing elsewhere, or does Detroit Lakes seem unique in any way?
I heard overall that the economy is doing quite well here, that there are a lot of jobs still available, businesses are still trying to hire. It's not as hot as it was a year or two ago in terms of the labor market. That's reflected in what you just said, by the way. And the economy is doing well. But I also heard nervousness. And nervousness, the factors that were put up on that word cloud, nervousness about, hey, what does the future look like? Is the year going to end as strong as it started? How does next year look? And so I would say overall, Detroit Lake seems like it's in a good place, but there's some nervousness around the edges of what does the future hold.
Mm-hmm. Very good. Well, let's open it up to our audience. If anybody has a question, we're going to start with Phil. Darren's going to bring the mic.
Let the microphone come. We're
Yep.
live streaming this, so you're going to be famous. And if you could introduce yourself, that would be great.
Phil Hansen, Becker County Commissioner. What is the district, the Federal Reserve District? Where are the boundaries?
Yeah, it's Minnesota, North and South Dakota, Montana, the Upper Peninsula of Michigan, and northwestern Wisconsin. So it's an enormous geography, but a lot of it's rural. And so a lot of the communities are different. A lot of it's ag-driven. There's energy, obviously, in North Dakota. It's quite varied.
Another question. Oh, wait, okay. Ron, go ahead, and then Darren, there's one back over there when
Okay,
you're
Ron
done.
Zeman, Detroit Lake City Council. The question I have, everybody's talking about housing. We have a shortage of housing, and it seems to be around interest rates and people needing down payment assistance. And so what's going to happen with housing in the next couple years?
Well, housing is a huge topic, not unique to Detroit Lakes. Almost everywhere we go, there are housing challenges. And it's complicated. Interest rates are one piece of the puzzle, and as you would expect, as interest rates to go down over time, as inflation comes down, that will probably lead to lower mortgage rates. But if you look at what's driving the cost of housing, we've underbuilt homes for the last decade all around our country, so where there's a shortage of homes. Then when COVID hit, people started wanting even bigger homes because some people worked from home and whatnot. That put even more demand for housing. And yet, we have some challenges. We have construction costs that have continued to climb all around the country. We have shortages of construction workers to build those homes. So those two things are going to keep, it seems to me, those two things are going to keep pushing the price of homes higher or keep them high. So this is a real challenge. And then we also have regulations and zoning and whatnot that also makes it more expensive to buy homes. So interest rates are one piece of that. There are longer-term issues that certainly the Federal Reserve does not influence or control. A lot of that is driven by city, state, and federal rules and regulations. Everything from, could be tariffs on lumber coming across the border. That could have an effect on prices, whether we have the workers that we need to build the home. So it's unfortunately a complicated puzzle that I don't have a lot of easy answers for you.
Great, there was a question over here.
Good morning. My name is Gary Christensen, retired general counsel from Securian Financial, a company you know well.
Very well.
Question, well, first of all, I want to thank you for being here and thank you for your role in the GFC. It was very instrumental. I did a lot of work researching the work you were doing at the time. Question for you is, what are the biggest challenges and opportunities you see facing the Minneapolis Federal Reserve at this point? And I'd love to hear your thoughts on cryptocurrency and central banks generally.
Well, there's a lot under that question. We know we're very clear on our mandates, which is Congress has created the Federal Reserve. Congress created us in 1913. We have goals that they've given us. Stable prices, get inflation all the way back down to our 2% target, and maximum employment as many people working as possible. We've made a lot of progress in bringing inflation down. Inflation is now running, depending how you measure it, somewhere between 2.5% and 3% a year. It's above our 2% target, so we have more work to do. That's a big challenge, and we're very focused on that. And hopefully we can do that while keeping the job market strong. In the last couple of years, a big pleasant surprise for us was that inflation came down while the job market stayed strong. Usually when we raise interest rates aggressively, in a sense, we're slamming the brakes on the economy to slow the economy, get inflation down. And in that environment, you might expect unemployment to go up. The unemployment rate didn't go up very much, so that was a good thing. We're trying to land the plane, so to speak. So I think the biggest challenge for us right now is to finish the job. And some of the policy uncertainty that you all talked about in your word cloud is complicating our analysis of the economy. In terms of cryptocurrency, I've been very outspoken about this, so I don't want to change what I've been saying. I'm a pretty big skeptic. Right? It's been 10, 12 years since Bitcoin's been around. Nobody's found a legitimate use case for it in a dozen years, other than as an instrument of speculation. Like you want to just bet it's going to go higher, that's up to you, go ahead and do that. Or as a way to get around bank regulations. There's no actual other use case for it. But if you want to speculate on it, I'm not here to tell you not to, it's up to you. Speculate with your money however you want. But it's been a dozen years. As opposed to, let me ask you this. How many people in this room have used AI in the last week? ChatGPT, Gemini, Grok, something like that. I have. I use it almost every day. Almost for the people watching at home, almost every hand went up. How many of you have bought or sold something with Bitcoin in the last week? Not a single hand has gone up. So a dozen years, and they're still searching for any kind of use for this, as opposed to AI, which is relatively brand new, and we're finding new uses every single day. So one of them is actually really useful. One of them is not. So hence my skepticism.
Good question. Other questions? Mike?
Good morning, Mike Stearns, MBFC. What are you seeing as far as how the ag economy is impacting communities throughout the 9th District?
Well, this is a big ag region, and the ag economy has had, it's so cyclical, and there have been low prices for a lot of crops in recent years. So we talked to a lot of farmers, and I've got ag-related companies on our board of directors as well that give us a lot of feedback of what's happening. So there are unique challenges. At the same time, productivity has been this incredible engine in the ag community for decades and decades, and hopefully that will continue. It's huge benefits to our country, huge benefits to the world. And as populations have left rural communities, because the ag economy has not needed as many workers to work those farms, that's created other challenges. You see schools closing, you see hospitals closing, just because people are leaving for other jobs in other areas. So really important, a big source of innovation in our economy and for the world, but also challenges. And and it gets complicated because at the same time all that's happening, land prices have continued to climb. And that introduces a different set of challenges as well. And so, like all things, if it were easy, we already would have figured it all out, but there's a lot going on there.
Very good. Other questions? Celeste.
Good morning. My name is Celeste Copy of West Central Initiative. Thank you for making the trip today. I am excited to hear you met with business leaders last night. I was also excited to see on the website for the Fed Reserve of Minneapolis that community outreach is prioritizing low to medium income workers. Do you have plans to meet with that demographic while you're here, or do you have examples of how you're accessing that demographic through this really cool texting thing that's going on? That was awesome. Thank you so much.
Thank you. On this visit, I don't, but we do a lot. I appreciate you pointing it out. We do a lot of outreach to community groups across the spectrum. we have something that you can find on our website called a Community Advisory Board, which is made up of essentially nonprofit leaders from around the region who represent different groups and give us feedback on what they are experiencing. We also, I've got a bunch of colleagues with me who do this work for us. We also do going out to their communities directly. Sometimes we'll do roundtables, not just with nonprofit groups. Sometimes we do roundtables with their customers, like their members directly. Grocery store workers. What were you experiencing during the pandemic? What were happening to your working conditions? What's happening to your wages, et cetera? So it's not one avenue. We just do a lot of outreach to get a sense of what's happening. Let me go back in time for a second. When I first got to the Federal Reserve in 2016, most of the economists said the US economy is operating at full employment or maximum employment. But when my colleagues and I would go out across the region and meet with especially lower income workers and groups that work with them, we heard a very different story. We heard that they were still looking for work, they're stuck in part-time jobs, they're looking for full-time work. Those conversations led me to say that we're misreading the labor market, that there's still slack in the labor market, we're not yet at full employment, and that directly influenced my vote to say we should not be raising interest rates because we're not really at full or maximum employment. So these kind of conversations are actually foundational to the work that we do.
And I will add, Celeste, at the roundtable we had Liz from Hubby speaking with Neel and kind of giving some perspective on their people that they help, their clients at Mojave. So that was helpful, I think, for Neel to hear that as well. All right.
Hi, Julia Nelmark with Midwest Minnesota Community Development Corp. And thank you for the opportunity to have the conversation with you yesterday. I would like to get your thoughts on how well our economy can work as kind of more of an internal economy without as much international interaction if the tariffs really come into play and last for a while. How well would the U.S. economy work without as much foreign back and forth there?
We are relative to most countries, we are less exposed to trade. When other smaller economies, economists will call them small open economies, where almost everything they do, not everything, but most of what they do goes across borders. Because our economy is so large and so diverse, we already are relatively insulated from trade dynamics around the world compared to many other economies. Having said that, there's a lot that you and I buy that comes from abroad. And so whether it's televisions or consumer goods, you go to Walmart, a lot of the hard goods that you're buying come from abroad. So either you wouldn't buy those goods anymore, or those goods would have to be made here in America. And what does that transition look like? And what would we end up paying for those goods at the end of the day? And these are going to be political trade-offs that we're going to make collectively through our elected leaders on what do we want that balance to look like. And I mean, there's a reason that goods production moves abroad. In 2018, when the first round of tariffs hit, what we saw was less reshoring. It wasn't that the production moved from China to America. We saw more evidence that the production moved from China to Vietnam or China to the Philippines, et cetera, because businesses said, well, I want the lowest cost I can produce it in so that I can offer my customers the lowest cost possible so I can compete. And so businesses try to move to the next lower cost alternative. We'll have to see how this all plays out.
Thanks for the question. Thomas, and then we'll go right to the table next.
I'm Thomas Hill from Essentia Health. Wanted to just get your thoughts, Neel, on childcare, as the Federal Reserve Bank has put out decades of research on the importance of it as it relates to the economy. It's a workforce issue, and it continually comes up as one of the top needs of the Becker County and Detroit Lakes communities as a need for quality, affordable childcare. And just curious if there's any policy, new data research coming out from the Federal Reserve, or if you can speak to localized solutions that are working in other communities that could be potentially employed here as well.
Yeah, it's a very tough issue, and we talked about it a little bit yesterday as well. And I spent actually a bunch of time trying to analyze it selfishly because I have 2 young children. I have a 6-year-old daughter and a 4-year-old son. My daughter's now in kindergarten, so it's not less of an issue. Our son is still in a daycare setting. My wife and I are very fortunate. We can afford it, but it's very expensive, and we know many people can't afford it. And so what's the challenge? At the same time, childcare workers are paid very little. And so there's something really weird going on, which is it's unaffordable for many families, and the wages are very, very low. And if you want wages to go up for childcare workers, and I think they should go up, it becomes even more unaffordable for families. And so how do you square that circle? Ultimately, the money has to come from somewhere. And so either governments could decide, hey, this is a priority, and we're going to support this to try to provide decent wages for childcare workers while maintaining affordability for families. Or in some communities, you've seen businesses step up and say, hey, I simply need the workers that I need, and this is going to go into my overall cost of operating to make sure I can get the workers that I need and provide some support for families to be able to afford the childcare. What I'm suggesting are not easy solutions, but that's it. That's the math. And an analogy that finally dawned on me was agriculture. And I'll give you an example why I think it's like agriculture. If you look around the world, most countries subsidize agriculture in some form. And why do they do that? They do that because they want high prices for farmers and low prices for consumers. Those two things are directly in conflict. The only way you can have high prices for farmers and low prices for consumers is with government subsidies of some form. The only way you can have decent wages for childcare workers and affordability for families is somebody else supporting that, the economics of that situation. And so I'm not here to say yes or no. I'm just here to say this is what the math is and why it is such a challenge, not just here in this region, but all around our district and around most of the country.
Thanks, Thomas. And we will hear more about daycare and from one of our presenters today, so a little bit more locally and what things are being worked on. So we'll look forward to that. We'll go right down front here.
Hi, Matt Rachensky with Mid-Minnesota Credit Union. My question was about, there's been a lot of talk about government debt and talks about efficiency. My question is, with a lot of debt coming due from treasuries, et cetera, at higher interest rates versus around the time you started, right, 2.5 on the 10-year, how much does that play a role in getting rates down in your guys's, when you're going through all the factors? How much does higher interest rates affect, the ability to bring those down?
Well, it doesn't affect our analysis. The gentleman is raising the distinction between monetary policy and fiscal policy. So fiscal policy is our elected leaders decide how much to tax us, whether it's sales taxes or income taxes or corporate taxes, and then what they choose to spend it on, whether it's defense or education or childcare or healthcare. Set that aside. Then there's monetary policy, which is what are the interest rates that we need to balance out the economy to get 2% inflation and maximum employment. So the effect of our monetary policy on interest rates and government borrowing costs, that does not come into our calculus. We're not supposed to think about that. We're supposed to say, what does the economy need right now to achieve these goals? And ultimately, it's up to Treasury and the Congress to sort out how much do they want to tax, how much do they want to spend, how much debt do they want to raise, and then the markets will determine what the cost of that debt is. If you look at the 10-year Treasury, there are a lot of things that go into the pricing of 10-year Treasuries or the interest rates. The Fed's interest rate policy, expected policy, is one component of that. Inflation expectations are another component of that. Then there's this residual that we call the term premium, which is all the stuff that we can't explain. It's like dark matter that goes into the 10-year Treasury, and economic growth is part of that. So if the economy is growing stronger and we have high productivity and there's a lot of investment, all else being equal, you would expect a higher interest rate environment because of that. Thanks.
Thank you. Right here, have Alyssa come give you the mic.
Hello, Austin Morris, Enclave Development. Kind kind of two-part question. One, can you share a little bit about equivalent cost of housing as it relates to inflation and what proportion that would make up? And then two, with single-family homes being in a state of, you have about 75% of people with mortgage rates less than 5%, so there's that stuck factor. Then we have an undersupply issue. Then we have a pricing challenge for any young person to buy a home, and they're buying them later, probably in their 30s. How do we get to 2% while not causing housing to be out of reach for a lot more people? And when we think about our kids or whatever, I go, gosh, maybe people will just rent. Maybe it'll be 40% of the United States rents in 15, 20 years.
So let's say, first of all, the inflation, we call it a basket. There are government economists who go out and look at what does an average household buy in a given month. And then, eggs obviously gets a lot of attention because of the price of eggs. That's a piece of the basket. Housing is a piece of it. And depending on the measure, it's somewhere between 25 and 40% of the basket. We use different measures of inflation. And so ballpark, 25 to 40% of the basket, quote unquote, of a typical American family, 25 to 40% of what they spend in a given month would go towards housing. In terms of cost of housing and inflation and interest rates, you're right. A lot of Americans refinanced their homes when interest rates were very low during the pandemic. And so the actual mortgages that most people are paying are nowhere near the 7% mortgage, roughly 6.5 or 7% that's being offered today. And so there is a stuck factor because people can't move or don't want to move because they don't want to reprice. Their mortgage on one house is at 3%. Buy a new house, it's at 6.5%. There's a big cost associated with that. The interest rate component of this is what I would think of as a shorter run component, which is in the next year or two, as inflation hopefully comes all the way back down, hopefully the labor market stays strong, we ought to be able to reduce interest rates further, which should have some effect on mortgage rates. But that's not going to change the underlying dynamics that we talked about a few minutes ago, which is it's expensive to build homes. Do you have the labor you need to be able to build the homes? Where do folks get the down payment? We've structurally underbuilt. And so that's a longer term challenge. And you're right. I mean, I think that people will end up, they need someplace to live. And so maybe people are going to rent for longer. Hopefully more development's going to come in and be able to buy the homes that Americans want. It's a real challenge.
All right, other questions? Mike. Right here.
Mike Ring from Council Realty. The Associated Press yesterday announced that consumer confidence is at a 12-year low. How do you feel about that, and how will that affect decision-making moving forward?
Yeah, there's been a real shift in confidence in the last couple months. As I said, I've been at the Fed for 10 years, and this is the most dramatic shift in confidence that I can recall, except for when COVID hit in March of 2020. And so when I think about, and a lot of it is what you all said in your word cloud, a lot of it is uncertainty around the tariffs. Right now, nobody knows how high are the tariffs going to go, what are they going to get applied to, what are other countries going to do, and how long are they going to be sustained? So that's created uncertainty. It's conceivable, here's why uncertainty is a challenge. If everybody in this room is nervous as a consumer and as a business owner, and everybody pulls back at the same time, that can dramatically weaken the economy just because everybody says, hey, I'm not going to go out to restaurants, I'm not going to invest in a new factory at the same time. That can slow the economy. So it's conceivable that the hit to confidence could be a bigger effect than the tariffs themselves. So that makes me nervous. The good news is that hit to confidence could be restored quickly if there are resolutions of these trade uncertainties right now. So if there are agreements between the United States and our major trading partners, then confidence in theory could be restored quickly. So I take very seriously the hit to confidence, but I don't know how long it's going to last. And the longer it lasts, the more meaningful it becomes.
Makes sense. Tanner.
Thank you. Tanner Goodrich, Essentia Health. I just want to follow up on that question a little bit. So in your view, as you're looking at the macro data, is that uncertainty irrational right now? Or, I mean, do you feel like the macros say that it's rational for people to have this kind of uncertainty?
You know, I'm reluctant to tell somebody who's nervous that you're irrational for being nervous. And if you look at our own deliberations at the Federal Reserve, I'm uncertain. You know, people have said, well, tariffs on one hand push up prices a little bit, so maybe that's inflationary, but then, so that would, all else being equal, think of a higher interest rate path if prices are higher. But then they're also slowing economic activity, which would push down interest rates, all else being equal. I look at those two things and think, okay, just, it's kind of a wash, just sit where we are for an extended period of time until we get clarity. And so I guess I'm just saying I share the uncertainty as we're trying to analyze and forecast the economy. I'm uncertain too. And so I don't want to tell anybody else that their uncertainty is irrational.
Fair. Other questions?
So let me ask you all some questions. Did I capture it correctly? Things overall, Detroit Lakes area is doing well, the economy is doing well, but there is this uncertainty that we've just been talking about. Does that sound right?
If you agree, just raise your hand really quick. We'll just see. Oh,
Great.
majority. Okay.
A lot of hands went up.
Mm-hmm.
Are there any other challenges that your region is experiencing, economic challenges, that we haven't talked about yet? We talked about housing, we talked about childcare. How about availability of workers? We haven't talked much about that today. One thing I know is in a lot of our district, especially our smaller communities, availability of workers is a perennial challenge. Is it more of a challenge today, or is it kind of the normal challenge that you have? All right, let's bring a microphone to you, sir. Appreciate you speaking up.
Yep.
Can you raise your hand? Okay, thank you.
It's more of a challenge, and housing is a big part of that because people can't move here because there's no place for them to live. So there's people that want to come here and take jobs, but they're unable to do so.
And is it possible, I mean, I saw some data on this, if somebody came here and said, hey, I want to build a house, would they be able to do it? Or it's just so expensive that it'd only be the upper echelon worker?
They could do it, but they couldn't afford to pay it or get a loan for it because their wage would not match what the housing cost is.
Behind you, there's another one.
Behind you, Beth.
I'm Beth Priddy with SBDC. I think the problem is that there's not good jobs for both spouses. I have a lot of friends that would like to move here. I also I help businesses with startup, and one spouse can get a good job, the other one can't get a career, if you will. They have to take something, lesser or just whatever's in the market, and that seems to be a big problem when you move to a town. It was a big problem when I moved here 24 years ago.
One area, and I've heard that a lot, so I know you're correct. One small source of optimism is that in the pandemic, of course, remote work became more normal. And I think the pendulum is swinging back for a lot of businesses, but I also think we're able to access a lot of talent all around the country that maybe we weren't able to access before. And so that shows, I think, long-run potential to hopefully help.
Celeste had some, Alyssa. There you go.
Thank you. I would like to return to your takeaway about economy doing well, and I would just encourage us all to think about how different segments of the population are experiencing the economy, because if we analyze our 30-year or longer history as a town, I'm 31 and have lived here for 31 years, right? But we are a resort town, a retirement community, so we can go into like the tale of two cities. The folks who are working for our tourists, for our retirement community, who don't have health insurance, can't afford the houses, and those who come here to truly enjoy the beauty, right? This is an amazing place. But I'd say we do have a little bit of a tale of two cities going on, where we have those in the service industry, and we've done well increasing opportunities that are stable. So I'd like to give credit to anyone who's been involved in that over my lifetime, because I think we have seen more manufacturing, more stability in jobs. but we're still really far away from a place where I think that anyone you pull off the street would say, yeah, I think the economy is doing well. That's my experience right now.
Thank you.
Alyssa, right behind you.
I just want to comment as somebody that employs a lot of people from the 20 to 30-year-old range. The biggest dynamic I'm seeing as hiring these people, they're coming out with student loan debt, $75,000 and $100,000, equal to my age where I bought my first home at. So not being able to make a mortgage payment because they're making student loan payments that are far more than a mortgage payment would be. So that housing struggle is real because they have these other debts coming out at 22 years old. And I would say 75% of my employees that I'm hiring in that range are 50,000 plus when they're coming out of student loan debt. So,
Can you tell us what business you're from?
I'm sorry, Michelle Wingler. I'm with Precision Landscape in Otter Tail, and we're growing into the Detroit Lake market this year.
Thank you. Other questions?
Aaron Tate with 49 North Advisors. I just wanted to echo a little bit on what Beth said. For me and my wife personally, she works in Fargo for a company you're familiar with, Bushel, with Jake Jornstedt over there, and we want to be here, and that's been a struggle back and forth a lot. But with Mom being over there and us being here and my business being there, Fargo supplying higher paying jobs, cost of housing, fortunately we've got two good jobs that we can afford that. That's, I think, a real dynamic for people living in the Detroit Lakes.
Yeah, for sure. For sure. Thank you. Well, let me say thank you. I really appreciate the conversation. I appreciate the hospitality. We had a really rich discussion, and I look forward to coming back to Detroit Lakes. And if you hear things or see things, my staff is here. We can leave our contact information. We'd love to hear from you. If things are happening that you think we ought to know about, please reach out. It'll just make us smarter in our understanding of the economy. And so, thank you so much.
Thank you, Neel.
Thank you, Jackie.
Thank you so much.